welcome to Adda 24/7. We are in the MCQ series for retail banking and wealth management, and today we'll be covering CBDC, one of the latest technologies upcoming in the banking system. These questions are asked AI, CBDC, then blockchain. These questions are asked to you in exam, so that's why follow the video completely. Firstly, let's know what are the subjects. JAIIB. The main subjects, there are basically four subjects. One is Indian economy and Indian financial system, principles and practices of banking, accounting and financial management for bankers, and retail banking and wealth management. So out of them, I am covering this retail banking and wealth management. It's a full series going on, okay? At the same time, every day. You can follow the series by just clicking on this subscribing to this channel as well as clicking on that bell icon. Okay, let's start. What is the CBDC? Central Bank Digital Currency. Remember, Central Bank Digital Currency. Remember, Central Bank, name itself says Central Bank. It means what? It means it is supported by Central Bank. It means what? It means it is supported by, what is the Central Bank of India? Which is the Central Bank of India? Everyone. Which is the Central Bank of India? It is, type fast, RBI, right? So it is supported by RBI. So digital currency. Digital means what? There will be no paper. No paper. Everything will be in the mobile. Everything will be digital. Okay. Now you will say, sir, right now also we are doing the same UPI transactions. What is UPI? We are doing digitally only. Where are we using the paper? So why do we need this extra currency? That I'll answer at the end. Okay, it's a very logical answer to this. I'll answer in the middle or in the end as the topic comes. Okay. So central bank digital currencies are digital tokens. Remember, digital tokens means if I'm saying I'm having 1 rupee, it means I'm having a token of 1 rupee. Similar to cryptocurrency. Remember, similar to cryptocurrency. Now some of us might have invested in cryptocurrencies, bitcoins and various are there. Mainly we know bitcoins, right? Many others are also there. So many of us might have invested, many of us might have lost in that. So everything is means possible over here. But the point over here is this CBDC is also like the cryptocurrency also. Then you'll say, sir, if it is same as cryptocurrency, then this also might lose the steam someday. This also might lose something, right? I might lose in this also, but there are less chances to this. Okay. Why there are less chances? Because it is backed by RBI, central bank. Not only RBI. In all the countries, it is backed by the central banks. Whichever country has this executed this and moving on with this project. So, digital tokens similar to cryptocurrencies issued by central banks. Here, always all the cryptocurrencies are failing. Why are they failing? Because of the issuer. Here, the issuer is central bank. Central bank means basically government. Because central bank is backed by the government. So, if the issuer is government, then there are no chances of failure. What is the currency? Normal note. Suppose if this rupee, we had that notebandi in 2016. Now we are having 2000 rupees notebandi, right? What do you mean by this? After this, all these 2000 rupee notes are gone, means when the time is over, or when the 1000 rupees notes were gone in 2016. Do you accept that 1000 rupee note now? You don't accept. Somebody might be having it in their pockets, in their home, kept, right? So those notes which were kept at that time, we don't use it now. Why? Because it is not backed by the central government. Same logic applies over here. The digital tokens, if they are backed by some government agency, then everyone will trust on it. These are pegged to the value of that country's fiat currency. Fiat means paper currency. It means what? This will be pegged to, suppose if I am having 1 rupee token of CBDC, then it means I am having 1 rupee with me. If I am having 1 lakh rupees tokens of CBDC with me, it means I am having 1 lakh rupees with me. So that's the meaning. Many countries are developing CBDCs and some have even implemented them. Because so many, which countries have implemented them? China has started the project. Huh? China has started the implementation. Even Nigeria started the implementation process. We are also in the advanced stages, but here there is a catch over here. There are certain codes which are to be broken up till now. Broken means they are to be solved. Once they are solved, then the CBDC will be implemented throughout the world. Majority of the countries, I don't say throughout the world, majority of the countries, those who are developing and developed. Because so many countries are researching ways to transition to digital currencies, it's important to understand what they are and what they mean for the society, right? Because after all, here, suppose many of us have the doubts, will I lose my money after CBDC comes? The notes which I am having in my pocket, will I lose it? The amount which I am having in my bank, will I lose it? Nothing will happen like this. Fiat money is a government issued currency. What is fiat money? Government issued paper currency, basically, you can say. See here, fiat means paper currency. Okay? It is now, why this name fiat? Fiat because it is not backed by any gold. Not backed by gold. Okay? Because earlier we were taught in our schools and colleges, whenever RBI issues the notes, RBI has to keep that much amount of gold, right? Many things were taught, nothing like that. Okay? So fiat means not by any gold. Okay? That is not backed by physical commodity like gold or silver. It is considered to be a form of legal tender that can be used to exchange goods and services. The introduction and evolution of cryptocurrency and blockchain technology have created further interest in cashless societies and digital currencies, right? Because of the cryptocurrency and blockchain technology, blockchain is also one of the major technology which has come in the banking world or in the finance world. It will change the entire banking and finance space. It has already started changing. So cryptocurrency and blockchain, because both are basically related. These both are based on the one concept that is called as DLT. Digital this distributed ledger system. Okay, distributed means once we say it's distributed, the requirement for audit in the banks, concurrent audit, it's gone. Once we say it's digital distributed means what? Immediately I come to know what the transaction has happened. So why do we need an audit? So these things means audit's face will change, audit's work will change. It won't be the same as we do it today in our banks, right? So that's why what we are saying is that cryptocurrency and digital distributed ledger technology or this blockchain technology will change the entire finance space. CBDC could also decrease the maintenance cost in the complex financial system. Maintenance cost is huge. What is the maintenance cost means? Printing the notes. Now these notes, physical notes, when they are printed, then they become soiled, then they have to replaced. This is all huge cost. Carrying cost. Carrying cost means we don't understand this concept of carrying cost, but when you are carrying a, let's say, 100 rupees note in your pocket, you are actually carrying a cost for this. There are huge costs for carrying that note. Means in the sense that currency is dead in your pocket up to the time you use it somewhere. So that is known as the carrying cost. So decrease the maintenance cost, so that will be reduced. Reduce the cross-border transaction cost, right? So cross-border means forex transactions, that will be reduced hugely. So provide those who currently use alternative money transfer methods with low cost operations. So right now, even now, we are having for NEFT and RTGS we have charges, right? All the banks do charge the charges. Even for forex we take the commission, but that will be reduced drastically once the CBDC comes in. Now remember one simple logic why this CBDC is important. It is important because the point which I will tell you is, suppose I am carrying a 1000 rupees, means let's say 10,000 rupees in my pocket. It means what? Up to the time it's in my pocket or up to the time it's in my cupboard, it's of no use to the economy. When it will be a CBDC, it will be useful to the economy hugely, right? So that's why This maintenance cost and will go, and low cost operations will have options will be there. Now everyone, kindly download Adda 24/7 app on your mobile. In this app you will be getting the premium study material plus live classes, ebooks, tests, everything. Okay, so that's why download it right now. Okay, what are the types of CBDCs? There are two types of CBDCs. One is wholesale and second is retail. Always remember, these questions are asked to you in exam. Wholesale and retail. Wholesale CBDC means, wholesale CBDC is similar to holding reserves in the central bank. Now means what? It means here, some of you might have studied some money types, M0, right? Have you studied this? M0, M1, M2, M3, M4. There are 5 types of money. Okay, M1, M2, M3, and M4, right? Out of this, M1 is called as narrow money, right? Narrow money. If you have not studied, you will study it somewhere. M3 is called as broad money, broad. Okay. Narrow money consists of what? CASA deposits of the bank. M2 consists of what? CASA deposits of the bank plus post office savings deposits. M3 consists of what? M1 plus FD of the bank. And M4 means M3 plus all the deposits of post office. But what is M0? We never talk of M0. M0 is actually the reserve money with Reserve Bank. It's only with Reserve Bank directly. So this wholesale CBDC is similar to M0. Okay. So this wholesale CBDC means actually M0 over here. Okay. So wholesale CBDC is similar to holding reserves in the central bank. Retail CBDC. Retail CBDCs are government-backed digital currencies used by consumers and businesses. Retail CBDCs eliminate intermediary risk, the risk that the private digital currency issuers might become bankrupt and lose customers' assets. What is the main problem with these cryptocurrencies? As I told you, the issuer. What happens? We buy those tokens, we buy those cryptocurrencies, and after 6 months we come to know that the owner is gone. The company is gone, right? So that becomes the basic problem. The issuer becomes the problem. So here the issuer will not be a problem. Why? Because the issuer is government itself. Government can't go, right? So that's why retail CBDC will be the digital tokens backed by the government itself. Everyone subscribe to Officers Adda 24/7 YouTube channel. In this channel you will be getting the latest updates on JAIIB and CAIIB, number 1, and number 2. You will be getting the free this video series or free lecture series on this Officers Adda 24/7 on all the subjects of JAIIB and CAIIB. So do it immediately. Okay, click on the bell icon. Okay, subscribe, click on the bell icon, do it fast. Now let's come to the questions. What is the main advantage of CBDC over physical cash? Low transaction cost, increased security, improved traceability, and all of the above. So what do you think is the answer? Main advantage of CBDC. Very simple, isn't it? What is the main advantage? Simple one. Yeah. It is all of the above, right? All of the above. Here, I told you I'll answer you this question. Then when we are having the UPI also I'm doing only what online transactions only. When I'm having UPI, PhonePe, everything, why should I need this CBDC then? Remember, the problem with UPI is, okay, it means whenever I transfer, let's say 100 rupees, let's say I'm having in UPI, in my balance in my bank, online banking, I'm having, let's say 1000 rupees. Okay. So what does it mean? It means that these 1000 rupees, if I go to ATM today and withdraw 1000 ATM, so what happens? This 1000 notes should be there. So the problem with UPI is, although UPI is only the method of payment, but these 1000 rupees which I am having in my bank, RBI has to print notes for these 1000 rupees. Under CBDC, this printing will be gone. There will not be any physical cash. So this ATM won't exist at all in CBDC. Now you'll say, sir, will ATM go? No. We are moving step by step towards digital currency. Immediately this thing will not happen. Now only you tell me how many times compared to last 5 years back and today, how many times do you go to ATM for withdrawal of cash? How many times? As frequently you went to for withdrawal of cash earlier, now you don't go that much. Why? Because of UPI, because you are doing online transactions. So already you have started a journey towards this cashless economy or this noteless economy, I will call it. So same thing is happening. Okay. So in CBDC, this 1000 rupees which I am having in the bank, the printing of these 1000s, or I am giving an example of 1000. It can be 1 lakh, 1 crore, 10 crores. The printing of these notes is not required to be done by RBI. Now, if printing of notes is not required, roughly 12% of the cost in this whole game of cash transactions is gone, because RBI requires around 12% of the expenses basically for printing the money. So that will be an advantage to the country as such. How CBDC will work in India? As a legal tender in the digital form, not as a legal tender, as a private currency, and none of the above. So how CBDC will work? Let's say this is ABCD. So it will work as what? It is a legal tender, correct? Because why? What is a legal tender? Legal tender means government backs this. It will be backed by the central bank, RBI. So once RBI backs it, it becomes a legal tender. Who invented CBDC? Event Smart Card created by Bank of Finland. Mastercard Smart Card created by Bank of Finland. Visa Smart Card created by Bank of Finland, and none of the above. So who invented it? Sure. One thing you understand, Mastercard and Visa card, these are not from Finland. So the correct answer is only one. Event Smart Card created by Bank of Finland. CBDC was invented by this Event Smart Card system created by Bank of Finland. What is the primary objective to introduce CBDC? To replace physical currency step by step, to improve financial inclusion and efficiency, to reduce money laundering, and all of the above. Obvious answer for this. What is the obvious answer for this? Everyone amongst you will know this answer. Is it only one? Because this is also one point. To improve financial inclusion, that is the main part or main focus of Indian government now, right? That's why we had those Jan Dhan accounts. And then reduce money laundering. So answer is all of the above. Correct. Okay. Who will regulate CBDC in India? RBI, SEBI, state government, or private players? If it is regulated by private players, then it becomes what? Another cryptocurrency. Crypto. Isn't it? It becomes another crypto. I'll write this. Another crypto. Okay. State governments are not allowed to regulate any currency in India. Otherwise, what happens? Where is India then? Every state will have its own currency, isn't it? SEBI looks after the stock market, capital markets, right? SEBI doesn't look into the note printing and all those things, right? So it will be monitored by RBI only, regulated by RBI. What is the main difference between CBDC and a cryptocurrency? In fact, remember, CBDC is a cryptocurrency. Only the point is, it is who has issued it. CBDCs are decentralized while cryptocurrencies are centralized. CBDCs are backed by central bank while cryptocurrencies are not. CBDCs use blockchain while cryptocurrencies do not. CBDCs have a fixed supply while cryptocurrencies do not. What is the main reason for, what is the main difference between them? Only one difference. Only one. Remaining all things are same. So answer is this B. It is backed by central bank while cryptocurrencies are not. Remaining all these A, C and D are same for CBDC and cryptocurrency. Both are under blockchain. Both are decentralized. CBDCs have a fixed supply, nothing like that. Fixed supply means here, it's not fixed supply actually. CBDC, even cryptos don't have a fixed supply, because there is a fixed supply when issued, but there can be a code which can reissue it later, because this has happened with 2 to 3 cryptos. That in Bitcoin there was a fork, right? 2 forks at that time. If somebody was in Bitcoin, they might be knowing it. So CBDC has a fixed supply. Central bank, if it resolves the code, it can issue next supply of currencies also. But the main point of CBDC is this: backed by central bank. So the failure is always zero in this case. What is the main difference between token based CBDC and account based CBDC? Now these are again two types of CBDCs. Token based CBDCs are more secure than account based. Token based are faster than account based. Token based are more anonymous than account based. Token based are offline capable while account based CBDCs are not. So answer is only one. Many of you might not be knowing this because we don't know this token based and account based. So if it comes in the exam, it is this. Token based CBDCs are more anonymous than account based. It's like having this cash. Token based is similar to that of the cash. You don't know who transfers cash to whom. But account based means transactions through account. So here you'll definitely come to know, right? So before moving, let me show you the batches. Remember guys, say this, the two batches which we are having, Sankalpa batch, kindly join them ASAP for your October exams. Remember, in October is not far off. You might be feeling that just now we have started for studies, nothing like that. October is just how many months? 2-3 months next, right? So go to Adda 24/7, click on JAIIB and CAIIB, click on JAIIB October 23, click, you will see this Sankalpa batch. See this, just now started, July 3rd, yesterday was just the introductory class. So join it ASAP, immediately join it, okay? Now, look at this, expert faculties, interactive classes, recorded videos, limited batch size, everything is there. Look at this. Click on this, see this, it's 15% off, but I'll give you something more. Click on this buy now, put this code MEAT, ME80, click on apply, look at this, you are getting 80% off. Use it right now only. Up to the time the code is valid, use it immediately. 19,999 reduces to 3,999.80, such a huge discount. Go for it, okay? In fact, you can go for Mahapacks, JAIIB, CAIIB Mahapacks. See the JAIIB, CAIIB Mahapack on the front page only. Go to Adda. If you are having the app, I would suggest go through the app. You will be getting 1% extra using the coin system. So just click on JAIIB ka Mahapack, or you can go for combined JAIIB, CAIIB Mahapack. Click on this. This will be useful for you for both JAIIB also and CAIIB also. Validity is 24 months. See this, 12 plus 12 months given under this offer. Okay. So click on this. And you can use the same ME80, use the code ME80, E80, click on apply, okay? See this, 45,449 reduces to 9,089, so 80% off. Immediately join it. I'll be back tomorrow with another series. Till then, bye, keep studying and do join the classes.